U.S. agriculture is wrapping up 2025 after another year defined by climate extremes, global trade disruptions, and an increasingly competitive landscape. As farmers look ahead to 2026, they're balancing caution with resilience, managing everything from volatile input costs to shifting patterns of global demand. Today, we're taking a deeper look at how the sector has evolved in recent years, what set 2025 apart, and what producers should be watching as we move into the new year. I'm Johanna Bota, and to help us break it all down, I'm joined by Arlan Suderman, Chief Commodities Economist at StoneX. Welcome back, Arlan, and happy almost New Year to you.
Happy New Year.
So let's start with a quick look back at 2025. What would you say were the biggest weather and production challenges U.S. farmers faced, and how do these fit into the pattern we've seen over the past several years?
I've been working with farmers on these factors for the last 4+ decades, and every year is different. Every year has its own challenges. Certainly, this last year we had some problems getting crop planted, particularly in the eastern parts of the Midwest, due to persistent rains. It looks like we may be facing something similar this coming year as well. Overall, we continue to see a pattern of drier weather in the western part of the Midwest. But when it came down to it in the middle of the year, we had a very cool finish to the year, even though it was very dry across many parts of the eastern Midwest. We had some good rains in the west. It kind of flip-flopped on the farmers and worked out to their advantage to a big crop. Now, it would have been much bigger if we would have had one more rain event, and that's been the pattern of late. It's just not finishing the years well. But with the cooler temperatures that accompanied it, reduced stress, and we still ended up with big crops and what will likely prove to be record crops in the end.
Okay, and from a trade standpoint, what would you say were the key developments in 2025, and how have they reshaped the global competitive position of U.S. grains and oilseeds?
Well, it's easy to say Donald Trump changed everything with the tariff war. But what he really did is amplify issues that were already there, maybe put them on fast forward some developments that were already happening. The bottom line is that the United States is no longer the low-cost producer in the world, and I think that tariffs really brought that to the forefront. China continues to be a buyer of U.S. goods only as it has to, where South America cannot provide everything that it needs. And of course, that means as they increase production, that we have declining purchases from the United States. President Trump tried to drive greater purchases of U.S. production by China with trade policy, trying to leverage their need to access the U.S. consumer to be willing to pay higher prices for U.S. ag commodities in order to have access to the U.S. consumer, and to some extent was successful in doing so. But Brazil is going to continue to expand. Brazil and Argentina, with Argentina now today announcing they're reducing their export taxes some more on agricultural commodities. Russia is going to be the low-cost wheat exporter, setting the world wheat prices. The U.S. farmer finds himself in a position of needing to develop the domestic demand front and maybe be more creative in some of the export fronts because he is no longer the low-cost producer.
Understood. Now, moving on to a different topic. Earlier this year, the EPA released its proposed renewable fuel standard targets for 2026-2027 and partially waived the 2025 cellulosic biofuel mandate. Now, we're still waiting for the final ruling, but can you tell us what these changes are and what it means for U.S. farmers?
Yeah, and it's a very related topic, actually, because realizing that we're not the world's low-cost producer anymore, we're trying to build that domestic demand, and every country supports its agriculture, and this is the way the United States is currently supporting its food production by supporting non-food use of these commodities to help keep the farmer healthy in the way. And we dramatically increased the blending requirement of biofuels. Now, the final number hasn't been set yet, but it looks like it's going to be a dramatic increase, along with subsidizing the use of the agricultural feedstocks to produce those biofuels. Overall, we know that The EPA is supporting a strong biofuel program. It looks like 7.1 billion RINs or renewable identification numbers required for blending. That may increase as high as 8.8 billion RINs if, in fact, we see them offset the small refinery exemptions. That's one of the things we're waiting to hear from EPA about. The other question is on a 50% RIN credit for feedstock that is imported in the United States. Refiners are asking that that go to 100%, worried about the supplies here in the United States. I think we'll probably reach some compromise where they'll go from 50% up closer to 100%, but also offset the small refinery exemptions by adding it to the requirements for the larger refineries. That's our expectation now. We really won't know until the EPA responds and publishes their final requirements, probably sometime between now and mid-January. But we think it's going to be very positive for domestic demand, and the trade deal that we have with China helps bridge that demand gap while we build our domestic biofuel infrastructure.
I see. So, given everything that's happened this year, then, what are the biggest concerns U.S. farmers are bringing into 2026?
Well, I think input costs are a big part of that. We've seen crop prices drop dramatically from their highs in the 21-22 marketing years, while input costs are up significantly and haven't followed those crop prices back down. So the very margin compressed, we're seeing farm bankruptcies increase nowhere close to where they were in the 1980s, which is kind of the modern day standard for problems. But overall input costs remain quite high. So farmers are having to look at what they can do to reduce input costs, try to manage that, try to manage their marketing in a way that they may not accept, may not have a price that they really want, but maybe a price they have to accept that makes sure they're still in business a year from now, and really tighten the books and maybe reduce some fertilizer costs, put off purchases of farm equipment, et cetera, until we turn this margin picture around.
Now, as we look ahead to next year, what kinds of weather risks should U.S. farmers be bracing for, and how could those risks impact yields and costs?
Well, it looks like we're moving toward an El Nino cycle in the weather pattern overall. Now, every El Nino and every La Nina is different, but that tends to support pretty good production. Overall, the current expectation from the models, and the models were very wrong over the last year, but the current models suggest that we might see the very dry soils that we have in the Midwest currently continue to linger into the spring, with good moisture in the eastern Midwest once again, which may again delay planting as we saw this last year, but drier in the west, and we may hold on to those dry soils. Now, if we hold on to those dry soils, it means we need to have a very wet summer, or we could see some yields really trimmed back in this coming year, and so that's a real concern. We generally need to go into the growing season with a full soil profile of moisture. That profile is empty across most of the Midwest. We expect to see the eastern Midwest see it refilled as we go into the winter and the spring. But the West is going to be a real problem if we don't see this weather pattern turn around for the coming year.
Okay. And one more question before we wrap up. I want to touch briefly on trade. How do you think global trade patterns will influence U.S. agriculture next year?
Well, the question is going to be, does China hold to the trade agreement that we have with them and pay higher costs for U.S. soybeans and other commodities to continue to have access to our U.S. consumer market? If they do not, then we're going to struggle with exports for soybeans. Corn demand looks very strong continuing into next year, so that should be good because Brazil is now building up their biofuel program, utilizing more and more of their production for biofuel. That removes a significant competitor, reduces a significant competitor, and I think gives us some opportunities on the corn front. Wheat is going to continue to be dependent on what happens in the Black Sea. We are seeing Russia reduce the amount of acreage planted to winter wheat. We're seeing the United States reduce the amount of acreage planted to winter wheat, other Northern Hemisphere locations. So we will be more vulnerable in the markets if we get a weather scare in the major producing areas in the Northern Hemisphere. So we could see some volatility in wheat and, of course, corn with strong demand. soybeans are going to be dependent on that Chinese buying.
Arlan, thank you so much for your insight as always. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.